record right now. All right, the record is currently on. So what are we looking at right now? We're looking at what we were able to, our strategy, which we used for the week, and what the strategy was able to produce for us, you know, and what this strategy is like. How does it work? Anyone who is in the team and wants to use this strategy, how is the person going to be able to use this strategy? So that's what we are looking at now. So like I always tell us, we start analysis from 1 week. Take note, we are day traders. In case this is your first meeting with us, we are day traders. We don't trade 2 days, 3 days. We don't take long trades. We take day trades because we mostly trade prop accounts. And like I said, to win a prop account, what you need is scalping. What you need is scalping. Yes, of course, long trades can be beautiful in Forex. But you see, right now, we are building. We're in the building stage. There'll be a time where some of us can have $50,000, $20,000 as capital for trading. Then we can now take long trades. But at this time, when we are still in the building process, we're building our finances, we're building our capital, it would be wrong to take long trades because it's going to put us in trouble, knowing how trickish the forex market is. So now you're going to observe that we've got a lot of lines in the screen. Of course, these lines came as a result of several analyses that has happened in the week. So, okay, these other ones, these entries here are for back testing. And these are entries I did for back testing because we're on the 1 week time frame. Okay. So first of all, we take price actions from here. Of course, price actions. If you're looking at my cursor, you see what I'm pointing. Price action, price action, price action. So we take these price actions from 1 week. We go straight to 24-hour. Is on the 24 hours we also look at trend. Don't forget, we look at trend from 1 week as well. So we wonder if it's a down or an uptrend. So looking at this trend, you can see it's a downtrend, even though there's a little bit of a counter trend, which I marked, and I told us at the beginning of the week that if for any reason price begins to obey this counter trend line, then we're going to be looking out for a counter trend against the downtrend. But after that, if price maintain this line and then this one, we constant downtrend. So that's what we did on the 1 week, and then we went straight to the 24-hour time frame. On the 24-hour time frame, we looked at trend as well, and it's clearly that we the downtrend. You can see, yeah. So this is the counter trend, and then this is the downtrend, and then generically, if you zoom in, you see that we're actually on a long downtrend, which has been going on and on and on. So also in this 24 hours time frame, we do take our price actions. So you're gonna pick your price actions, and we do green lines for price actions, we do blue lines for um trend lines. Now don't be worried. Don't be worried. There's gonna be another Zoom at the beginning of the week, which is on Monday morning, where we're going to be having the weekly analysis. So in that weekly analysis, some of the things I'm saying so fast now will be done practically, and that's what you need to learn and pay attention to. Now, the reason you see them a bit fast is so we can be able to manage our time and able to keep up with the time. So after taking all the price actions from the 24 hours time frame and trend lines, we go straight to the 4-hour time frame. I always tell you, turn on your session break at this part. Turn on your session break. There's still some people who are yet to turn on their session breaks in the team. And that's why you have issues identifying the two candles that starts the week. It's simple to turn on session break. It goes to setting. When you get to setting, you click on event. When you click on event, you tick the session breaks. Now we use green line for session breaks. We use red line. You can turn on the economic events on charts, only future events, event breakouts, latest news and minds. We use red line for that. So what does this do for us? The session breaks tells us when each day starts and when each day closes. You can see this is the beginning of this day and it's when it ended. Okay. Then the red line, which is for the event, tells us, oh, this particular time is going to be news time. And we do not trade news. Take note of that. We do not trade news because news sometimes can go against our analysis. So another thing again we do on this 4-hour time frame is we look at our trend. So you can see when we are on a downtrend. Okay. So after that, we take price actions, and in taking price actions, we identify blocks. We identify blocks, either the order block or the BOS, which is a break of structure. So any other block that is broken is what we call BOS, the break of structure. Of course, you'll be seeing the blue lines that are very thick and the red lines. So now what are the red lines? At the beginning of every week, before we're able to identify the buy region and sell region, what we do is we look at the two candles that starts the week. So where did our week start? Our week started on Sunday, 17th September. So this is where our week started. And this was a candle that started the week. And this is the second candle. So the first two candles that start the week, you're going to identify the higher high and then the lower low. So the higher high of the candle that starts the week is what you see marked with red, and the higher low and the lower low is the one marked with red again. So you just know for this strategy that throughout that week, you're going to be buying from the top parts and you're going to be selling from the down parts of those two red lines marked. That's actually the essence of the line. Someone is saying you can't actually hear. It's actually from your side. It's actually from your side. Oh, thank you, Brother Barry, for that response. So at least the person will just take notes and probably work on his or her deficiency. But the person shouldn't worry. The video is going to be on Facebook and on YouTube, so you can make reference to it so that we can keep up to the time. We have 10 more minutes to close this particular Zoom call. So that's actually how we are able to identify the buy region for the week and the sell region for the week. Now, the psychological levels are the blue tick lines, but we do not take psychological levels from 4-hour time frame. Take notes. I said trend, I said price action, I said session breaks, I said two candles that starts the week. Then I said events, and then blocks, either order block, OB, or BOS, break of structure. So that's what we do on the 4-hour time frame. Once that is done, we go straight to the 1-hour time frame. Leave 3, leave 2, leave just go straight to 1, because 2, 3 is almost the same as 4. So it's on the 1-hour time frame again. We look at the trend and we see that we are on a downtrend. We take price actions. Of course, price actions are very strong from higher time frames. So the ones we take from 4-hour time frame is very key and significant for us. From 1-hour time frame, we just look at the ones that are not yet seen, because 1-hour time frame is a smaller time frame to the 4 hours. So there are some that are not seen in 4 hours. So we just identify them and mark them. And then we also identify the blocks. We identify the blocks. You can see from here. That's what we did here. Identifying blocks to see the ones that will serve as a strong resistance or a support. So once that is done, that's all for the 1-hour time frame. We move straight to 15 minutes, which is our final time frame. We don't do 45, we don't do 30, because the difference is not much. I don't necessarily do 5, 3, and 1. The reason is because of the speed. The speed can be very, very, can put a lot of pressure on you. So I mostly stick to 15 minutes because that's where I make my entry from. So it's on this 15 minutes time frame. We look at trend also. Of course, we're still on a downtrend. And then we do the psychological level. How do we get the psychological level? It's very simple. First of all, we start by looking at the current price, where price is currently as we're taking analysis. As when we did this analysis, price was just about here. And because price is about here, all we need to do is we draw a blue line. A blue line is our psychological level. So we use the horizontal ray blue line. So once you drop it, all you need to do is to click on the line. And the current price as of then was just about 1.239. So you come to certain and you look for the closest psychological level. What are psychological levels? Psychological levels are numbers that are round figures. And these numbers play a very significant role because this is where the bankers and the financial institutions come into the market. And they usually drive the market very hard. So we want to mark those levels so that in making decisions and entries during the week, we're going to be using these psychological levels as key levels. And they're usually round numbers because financial institutions don't like coming with any just number. They come with round up numbers. So the closest psychological level to that number is 1.24000. So all you need to do is to take out the numbers before the 4, and you have 000. So the next one going upward will now be, for those of you who've not done the PIPS course, you might have an issue with this, but just take note, because since we're sticking to GU, that for GU, upward, you just need to add a 5 to the third zero. Is that okay? To the third digit. So you just say 1.245 upward. So the next one after 1.245 will now be 1.250, because when you add 5 to 45, it becomes 50. You get? And then downward, if you're going to subtract 5 from 1.24000, it will be 35. And that's why we have downward as 1.235. So that's how we marked the psychological levels. So as soon as we've done that, marking out price actions, the next thing to look at is entries. So how did we take our first entries, which is the analysis for the week? Our first entry is this. How do we make that decision? First of all, I always tell you that there are confluences or factors which you must put in place while you're making entries. First one is you're going to observe the trend, right? Second one is you're going to observe the pattern. Third one is you're going to look at the psychological level, right? You're going to look at the psychological level. Fourth one is you're going to look at the price action. I'm having an online meeting. The fourth one is going to be price action. Then the fifth one is going to be, how do we look at the fifth one now? I think this 4 is good for us. If there's any case to add another one, we will do that. But these 4 factors are good for us for making entries. So these are the 4 factors I looked at when I'm making my entries. So for the trend, this is how we do it now. Okay. So for the first entry, what's the trend? The trend is a downtrend. Okay. After downtrend, what's the pattern? If you look at the pattern, you observe that this is an M pattern. And anytime there's an M pattern, there's usually a sell, a bearish move. Let me correct the spelling on my pattern. Okay. So I was looking out for a bearish move, but now the price is on a psychological level. So I'm going to look at for a bearish candle, breaking the psychological level and breaking any price action. Now the price action will now be my stop loss. And that's why you can see that this entry is on the psychological level and the stop loss was just after this. So you must be able to hide your stop loss from the AI. Don't expose it. If you put your stop loss here, the candle will hit your stop loss before it begins to go down. So that's why you can see that my stop loss was just above this double touch. Okay, now another one again, another condition is double touch. You can see there's a touch here, there's a touch here, so there's an order block here that's not broken, even though it's not drawn. Take note, whenever another block is not drawn, don't think we are not seeing it. It's just that it was not drawn. There's another block here that is not broken. And what is order block? Order block is what tells you that there is pressure in either buying or selling. So orders are being made. So this order block is telling you that a lot of sellers are entering into this market. And that's why I decided to go selling. I went bearish. And finally, it hits our TP and went even below that. And after that, I was looking at, please, when you come in, mute your mic, please. When you come in, mute your mic. Please don't come in unmuted. Please, can you mute your mic? We have just 3 minutes to close. Okay, so now, how do we make the second entry? Same way. What did we tell you about psychological levels? They are key levels. you will notice that this touch respected the psychological level. This one respected the psychological. This one respected the psychological level. This one respected the psychological level. Until when there was a bearish move that came down to this point, that's the only one that did not respect the psychological level. Of course, we don't own the market, so we cannot say it will keep respecting psychological level forever. So that you can't do that. When you do that, you'll be gambling and you'll be guessing. So it's because he respected the psychological level, all I needed to do was to wait for another bearish move, another bullish move. So when I noticed, how did I confirm this bullish move? I saw that there was a BOS first here, but not a very strong BOS. BOS is break of structure. This bearish candle broke this structure. And then before you know it, there was an order block that was formed here. The moment I observed this order block, I already knew that buyers are going to pressure this market. So there's going to be, what do we call it now? There's going to be, pressure from buyers. So liquidity, yeah. So in that process, I decided to take a bullish move, but I needed to wait for a bullish candle to confirm. I confirmed here, I took this one. I confirmed there, I took this one. And I was not waiting for it to hit psychological level, but for some reasons, I was able to hit. And the moment it got to psychological level, I was waiting for another order block to confirm an entry with a bearish candle to break through the psychological level. And I took this entry again, and it was so beautiful. And you can see where it got to. So these are the factors we consider before making all of these entries that we made. And so far, so good. It was a very busy week, and that's why I didn't take entries here. Okay, I was in a lot of engagement this period, and then very busy week. I didn't take some entries here. But look at all of these entries were winning entries, winning entries. Those of them that did not hit the final TP, at least they hit TP1 before they went to hit our stop loss. But by then we're already out of the market. I don't think there was any entry that hit stop loss this week. There was no one entry that hit stop loss this week. All of them hit TP1 first, except for the one I did not close at TP1. That's the one that took me out. So don't be greedy. Once you see that TP1 is done, you can close, wait for another entry, or you can break even, secure profit, and still go on if it exceeds TP1 to go more. So these are how we come about our decisions in all of our entries for